Trading wins and losses is just like everything else in life that is worth fighting for. You remember your marriage? Man, it was beautiful when you were getting married, but you had no idea how ugly the losses of this divorce were actually going to be. Like opening a business, thinking you'd get rich overnight. But in the midst of it, you ended up maxing all of your credit cards just to sustain that business for a few years before you even realize a tiny bit of your first profits. Like buying a house thinking it would go up in value forever and ever, just realizing how wrong you actually were when 2008 hit. Like having kids, it was such a great idea at first. Remember how excited you were, terrified and scared at the same time, how much joy you actually had. Until your kids turned 2. Man, the terrible 2s. You thought that was bad until they turned 13, 14, 15. Shit. But you wouldn't change it for anything. You love your kids, no matter what your emotional losses or wins are with them, no matter what your financial losses or wins are. It really doesn't matter, does it? You don't quit on your kids, no matter how tough things actually get. For some of us, it's the same thing with trading. Just think, how long are your kids going to be your kids? The answer is forever. How long do you see yourself trading the markets? If your answer is forever, then you owe it to yourself and your kids to invest in the 13 market moves formula, so that your life journey of trading would be most rewarding and joyful, both financially and emotionally. Live to trade, trade to live. Conquer the world one trade at a time, fearlessly using the 13 market moves formula today.
There's one thing you need to know about trading the market today, and that is short the hell out of this bounce. You may be thinking, Leonardo, what the hell? You were saying the market was going to gap down. Guys, sometimes with this market's moves, you will have a small delay effect. But we're still on track for the biggest crash in the history over the course of the next 10 to 14 days. So as I'm looking and recording this, guys, guess what? The Dow is up 666 points on March the 4th pre-market. Call this a coincidence or call this something else, but the most important thing I want to show you is this.
Reports the number of the coronavirus cases in Switzerland now has jumped to 54, with another 100 suspected cases being tested.
Damn it! I'm getting worried. I had a little fever yesterday. Oh boy. Guys, focus. This is the most important chart that I was looking at yesterday. You should focus on this and you'll have no fear trading the markets today. Make sure you short the hell out of it as soon as it opens. Here's the deal. This is October 2008 historic analog. Now, the dates right here, okay, if you look at this candle, that would be the close of February match of 28th of February, just a few days ago. This is what you should focus on, is this white candle right here, guys. This white candle right here is extremely, extremely important. This is what was happening on Monday, March the 2nd. So October 13th analog right here would actually be the equivalent of March 2nd, Monday, just a couple of days ago. The next move was yesterday, March the 3rd, 2020, would be the equivalent of the move on October 14th, 2008. The next move is today. This is what we're about to see today. Don't worry about the current price action. It will take care of itself. As a matter of fact, if you didn't have a chance to pull the trigger and buy on these puts, you have an awesome opportunity to do it this morning. Okay, if you bought some, and add more puts to your positions, because this is what's about to happen today and this is what's about to happen tomorrow. Just to break it down in this historic equivalent, the move from yesterday's high when we're sending out the alerts to our group members at a level of 31.37 on S&P. And I know this is a Dow Jones chart, but I'm going to show you some other charts in just a second. So this right here would be an equivalent of the top of the day yesterday. And look what happens within yesterday, today, and tomorrow. This is a 17% drop. Now, this would be crazy if the 17% drop exactly duplicated the history, but even if we get a 5 to 10% drop, guys, it's going to be brutal. It is going to be brutal, and I don't want you guys to miss it. So I was looking at this yesterday. It was just such a hectic day. I didn't have a chance to insert this chart. Now, important to notice, back then, it's basically a move on Dow from about 9,800 all the way to about 8,100, representing about 17% drop. In today's terms, it's about a 4,400 point drop. So if you were listening to yesterday's video, you're like, how the hell is he coming up with Dow 22,000, right, in the next 10 days? Well, this is how. You take the current, where it's trading currently, subtract about 4,400 points, and that's how you get to Dow 22,000. Okay, very simple math. So with that in mind, I'm going to show you some charts that we're showing to some of our 13 Markets Move Daily Analysis video members. And so basically this was the most crucial point of the day yesterday. So after the market goes lower consistently for a few days, it creates this final gap down. It creates this gap down. And so after it marches 1,300 points higher, or in S&P we had this wild move higher, 1,300 points was on Dow Jones, we are stuck right against this gap. Now, this was a snapshot from March 2nd, which was Monday. Now, look what happens yesterday on March 3rd. Okay, nothing changes. We're unable to clear this gap. Now, the craziest thing, we're actually unable to clear this gap when? When the Federal Reserve announces it's going to cut rates by 0.5 point. When was the last time you saw Federal Reserve cut interest rates and the market didn't go higher? As a matter of fact, if you were to turn off everything, if you were sitting on top of the mountain somewhere with no internet, no news, no nothing, and if I was to walk up to you, and say, hey, Federal Reserve just got interest rates by 0.5 percentage point, what would your response be? Oh, the market is crashing. No, your response would be, oh my God, I gotta buy this market. What, are you serious, man? They cut more interest rates? Oh man, I'm a bull. That's exactly what you've been thinking, because that's what interest rate cuts has conditioned you to believe. Okay, but yesterday I pointed out it's the rate of change in the cut that creates the spirals lower in the market. In other words, Fed realizes that things are about to get out of control. Just think about it, guys. The Federal Reserve meeting this week, actually this month in March, is on the 18th. Why on earth would they be coming out 2 weeks prior to the meeting? I mean, just 2 weeks. They could have just waited 2 weeks and said, hey, we're cutting the rates then. No, but they had to do it yesterday on March the 3rd. This urgency cut. Urgency cut when? When the economy is supposed to be the greatest economy ever of all times. So just keep these things in mind as I'm showing you these charts. Okay, so Dow Jones, okay, that would be an equivalent. This is a weekly chart. I want you to pay attention to this reversal candle yesterday. So the interest rate announcement comes in. The market bounces where? All the way to the blue line. But even with what would technically be great news for the market, interest rates are going lower. The market should be rocketing higher like crazy, but it stops out exactly at this blue line. And shockingly, just barely touches it, right? And then finishes at the lows of the day. Now, important characteristic of this is to understand if you are closely trading the markets. On Friday, we had a characteristic where the market jumps hugely in the last 15 minutes of the trading session. On Monday, we had a situation where the market jumps hugely in the last half an hour of the trading session. What did we get yesterday? If anything, yesterday the market actually had a strong reason to rocket higher and continue with such behavior of creating sharp bounces into the close. Did we get that? Absolutely freaking not. Okay, instead of that, we closed very closely to the lows of the day. So understanding these is key, and this is not a bullish formation type candle. Typically when you get a candle like this, guys, the next day is lower. So even though so far at the time I'm recording this, we're not getting down, it doesn't mean that between now and the next 2 hours, guys, about 7:45 a.m., it doesn't mean the next couple hours the market is not going to sell off like crazy. So don't focus on the current price action. It's the very fact that the market is actually bouncing, okay? It's a characteristic of what a typical bear market would do. These bounces will come in and then they will sell off rather sharply. Okay, understanding this Dow Jones chart on daily is also important. So if we're to break down the chart I've just shown you a little bit closer, this is what you got. You see that gap down I was showing you on S&P. Okay, it's the same characteristic, only it looks much worse on Dow. Okay, because Dow can't even touch the orange line. So 2 days in a row with this huge size move on Monday, represented by this white candle, okay, which we accurately predicted before it happened on Friday that this was going to happen. But look, with the greatest catalyst, half a point interest rate cut, it can't even touch the orange line, the 200-day moving average, okay? And look at all the volume. All the volume is to the downside. Now, when we look back in history, again, I'm going to show you the very first slide I'm going to show you the very first slide one more time here, guys, because it's crucial that first you look at this. So you see how the continuous sell-off just keeps going. And we had this huge white candle. Pay attention to this candle as well. This was a bullish reversal candle followed by a huge white candle representing this 1,300-point move in the markets. Okay, look at this next candle. And I'm going to show you right now the closest match in the history of the United States market, and that is October 2008. So watch this. Same action. Sell-off, 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 sell-off. Look at this candle right here. Tail sticking down. Look at the white candle right here. Some of the strongest bounces. Now look at this candle and look at what it is projecting for us to see today and tomorrow. Now notably, after a huge drop today, the market is still going to go lower tomorrow, but it's not going to finish at the lows. Okay, so this is very important information to understand and utilize in your day-to-day trading. So again, why are we looking at October 8th historic analog? Because look at this candle, look at this white candle, look at this candle. It's a perfect match. Look at this. Sell off, sell off, sell off, sell off. This candle right here, followed by this candle, followed by this. It's a pretty much identical match to this right here, guys. Okay, so with that said, guys, the Federal Reserve at this point, it's the death of monetary policy. Okay, we're officially the last country to have pretty much positive interest rates. With that being taken away, guys, I mean, all hell is about to break loose, and you got to be ready for it. I mean, housing prices are going to be slashed by 50% in the next, year to a year and a half. This real estate crisis is about to start hitting. So, get out while you can. Guys, I can only repeat it so many times. I warned everybody on this channel about this coming up in the last few months, continuously, repeatedly, when people that, refuse to believe that even a small correction could be possible, now that the market has come down a little bit and bounced Monday like crazy, nobody believes that a bigger move is going to come, but that's exactly when this bigger move is going to come. So guys, don't look at the current price action. Okay, the fact that half a point rate cut and what we get a market drop. Okay, that is a total shift in the market behavior, because if you look throughout the last 10 years, every time they've cut, what happened? Market moves higher. Every time they cut, market moves higher. This is the first time they cut the rate, and notice they didn't cut it just by a quarter point, they cut it by an entire 0.5%, the market actually dropped. So very important to understand that this is a huge shift in the market behavior. So the question is, okay, where the hell are they going to cut to next? Okay, we're pretty much at zero. Okay, we're like a point away from zero. So that's why I call this the death of the monetary policy. Federal Reserve is in a checkmate. There's nothing else they can do. So the question is, okay, what is next? Okay, if everything has been priced for such perfection and everybody all of a sudden realizes it and everybody starts running for the exit, well, the only other move that Trump has up to his sleeve is, it's the fiscal policy. He's going to have to cut taxes. But just think of it this way. A lot of you could argue the fact saying, well, hey, I mean, the rates are falling. I'm going to go and refinance my house. Guess what? Your payment is just going to go down a little bit. The question becomes a question of cash flow. So it's not how low the interest rate you get on the house, but how consistent your cash flow is. So if the cash flow goes away, it doesn't matter whether the interest rate is 0 or it's -1. People simply not going to have the money to pay for the house. Same thing, with corporate debt. The thing is, just look, I'm going to sidetrack for just a brief moment, guys. Back in the days, okay, when somebody wanted to finance a car, we were getting like a 1-year loan, 2-year loan, 3-year loan. Right now, people are taking 72 months loans, 96 months. Okay, what does this really tell you about the state of the economy or the consumer? It tells you that while the media, the politicians make you believe that the economy is in greatest shape ever, it's actually the opposite is true, because the economy was in the greatest shape ever. Nobody would ever need to take out a 96-month loan on a damn vehicle. Okay, so just think about it. If you know somebody that is taking out a 96-month loan on a car or a truck, okay, what are they really doing? What are they really saying? Well, they're saying that they can't afford the damn thing. And if they can't afford the damn thing, okay, they shouldn't be getting it in the first place. And the same thing with mortgages. Nobody was taking out no damn 30-year mortgage some time ago, but now it's a common practice, right? It's just we keep stretching and stretching things, and where things collapse is not, it's not a question of how low the interest rate is, but the ability of somebody to even be able to maintain and make this payment. So basically, the fact that somebody's car payment is at a $500 and they can refinance and get maybe a $460 payment on it, okay, it doesn't make the payment go away. The payment is still there. So where things crash is when that person gets laid off, and now it doesn't matter. Even if the payment was $200, they can't afford the damn thing. Okay, it doesn't matter if you refinance your house and your payment drops from $2,800 to $2,350. Guess what? You still need to come up with $2,350 every month. So that's the biggest point. Okay, so with that understanding these things, the next move is they're gonna have to cut taxes. The monetary policy, they can't do shit with it. That's over. Okay, so next move is they're gonna cut taxes. The question is how fast they're gonna do it. I'm expecting Trump to actually send out more stimulus checks than Obama did in his presidency. Literally, in the next 12 months, expect Trump to send you a stimulus check in the mail. Okay, they've done it before. They're going to do it again. They're going to do everything to keep this thing afloat. But this is what the biggest miscalculation is. Okay, everybody thinks, well, what is a half-point rate cut? Why are they doing it? That's not going to fight the coronavirus. Forget about the coronavirus. The coronavirus is just something that's actually triggering the domino effect. It could have been something else. Okay, the most important thing is everything has been priced for such perfection. All the companies have been taking out loans and conditioned to take out loans over the last 10 years because of cheap money. They have adjusted their businesses and lifestyles of their businesses to that cheap money. And they've been conditioned and encouraged to go out there and borrow more. Borrow more. Hey, money is cheap. Go get it. Go borrow some more money. Go borrow more. Okay, and that thing, it stops. It comes to an end. And this is an end right now. So it's time to get the hell out of the market. Okay, if you know how to short the market, it's time to make a bunch of money on shorting the market. But things are going to get really, really wild over the next 12 to 24 months. And a big hit in the market itself could actually spiral this week and next week, guys. Okay, when people realize how many companies are actually going to file for bankruptcies on the in this country, it's sad, but it's going to become a fact. So, and the main reason that's going to happen is because they're not going to be able to pay the corporate loans. So corporate debt, as you know, corporate debt in America is at all-time highs. It's the highest. It's higher than it was during the 2008 crisis. Okay, so Why do you think the banking sector is selling off? Why do you think all of a sudden, all of these banking stocks, I mean, we were just in JP Morgan at 140 bucks. Well, we're getting close to 110. I mean, we're just at Goldman Sachs. I was making a video not so long ago about Goldman Sachs drop. How it was in the 240s. Well, now it's close to the 200. So, guys, banking sector is selling off for a reason. Yeah, you can argue that clearly the rate cut could be one of them, but that's not the main reason. Okay, this sudden rate cut of half a point really communicates a story to us how horrible things are. That tells us there's going to be massive corporate defaults, massive layoffs as the result of companies, filing for bankruptcies. There's going to be massive layoffs. People are going to be losing jobs, and all of a sudden, the domino effect, finally punctures something that this whole fake rally has been based on, or at least that's what they've been conditioning you to believe, is the consumer is strong. The consumer is not strong, otherwise it wouldn't need to borrow all this damn money to be buying things that, they don't really need. Okay, it's just the economy has been encouraging everybody to do so. But now everybody's so damn scared because they know that this shit is unreal. This 96-month auto installment payment that possibly you have or somebody else that you know has sitting in their garage, you understand that this shit is not real. There's no reason they should be having that car. And that car is probably sitting in a house on which somebody, took a 30-year mortgage, okay? That's not real. It's not their house. It's not their car. Guess who this shit belongs to? It belongs to the bank. And the bank is about to take the shit away. Okay? And refinancing at a lower interest rate could prolong it. Okay? But when these massive layoffs hit over the course of the next 6 to 12 months, guys, it's going to be scary. Okay? So set some cash aside. Short the hell out of the market. Get ready for it. I mean, there's no other way to put it. So the fake story, how strong the U.S. consumer is, it's fake. That's all it is. So understanding this is going to prepare you to do the right things over the course of the next 12, 24 months. So what do you expect? Basically, I mean, the country as a whole, we voted for a president that has filed multiple bankruptcies. Okay, yeah. Let's spend it. What the hell? Let's print more. Let's cut rates. I mean, you expect a Republican to be a bit more conservative, but, Trump went on a binge spending spree like no other president ever before. I mean, this is absolutely insane. Borrow, let's borrow some more. Fed got the rates so they can keep borrowing. Guys, this is as fake as it gets, okay? The United States economy is not growing because, we're manufacturing stuff. It's not like it was in the early 1900s when we produced more than the rest of the world combined. Okay, this economy is being sustained by spending, but there comes a point, when additional rate cuts don't produce the desired boost in spending. As we pointed out in the prior videos, okay, it's a simple law of economics where, it's the law of marginal utility. Okay, when you eat that extra burger number 3 or 4 after eating the first 2, okay, the satisfaction is not there. You don't crave the 5th burger anymore. Okay, it's the same thing. When you keep cutting the rates and you keep cutting the rates, the fact that you just taking the rates to a 0 all of a sudden is not going to cause people to go out there and spend a ton more to maintain this fake economy. So basically, BK. A good time to become a bankruptcy attorney in this country, guys. Okay, so the question of the day, all right, after we brought some light to the current situation is lowest unemployment in 50 years, right? The greatest ever economy in the history of humanity. Okay, so the question is, why the hell do we have to cut interest rates so urgently? Why do we need an emergency stimulus package when the economy is the best ever freaking economy that we've ever had in humanity? Why do we need an emergency stimulus? Okay, well, it's not the coronavirus, trust me, because if the economy was this damn strong, it should sure handle and be able to handle the coronavirus easily. Okay, well, the fact that we need all these emergency stimuli is because we've been lied to. Okay, the economy is horrible. Okay, these numbers that they've been feeding us, we can't rely on their validity. Who checks the numbers? Do you check the number? I don't know if these numbers are real, okay? So what the action of the Federal Reserve just told us, that a lot of these numbers we've been shown probably over the last, 5 years, 10 years, whatever it could be. I mean, they're not real numbers, okay? We don't need a damn emergency stimulus package if the economy is great, as they've been telling us it has been. So basically, the second question, most important question, if the economy is so strong, why can't it handle a virus? And I think a good historic example, I briefly touched on this period in U.S. history in the early 1900s. Particularly, it's worth it to look into this period of 1918, okay? Because in 1918, again, we actually got hit with the greatest flu. It was called the Spanish flu. It's a bit confusing, but it was literally taking lives of thousands of people in certain towns. There were literally towns in the United States that were size 10, 15,000 population, and pretty much everybody was dead as a result of the virus. It took a total of about 700,000 lives in the United States, okay, within that year. But the economy did not collapse. Right after that, as you know, we went straight into this, the roaring 20s right after that. Why? Because at that point we had a gold standard. Okay, we were, again, manufacturing more than the rest of the world combined. Okay, now we don't manufacture nothing. Okay, there is no gold standard. Okay, we went from the greatest economy, the greatest country in the early 1900s to the country that owes everybody. Okay, and the country itself is just a mirror image of what corporations are doing, and mirror image of what the president has done multiple times, which is file for bankruptcy. Now the question is, he can't file the damn bankruptcy on the country. It's all these things that are about to take place is what's basically going to be called the biggest bankruptcy in the United States history ever. So a little bit more in helping you understand this Spanish flu in 1918, right? Estimated it infected 500 million people worldwide. So 1/3 of planet's population at the time, okay, was infected, and it killed an estimated 20 million to 50 million victims. 675,000 Americans. And after this happens, okay, United States is actually able to bounce. Okay, that's why this Spanish flu pandemic of 1918, you don't hear a lot of people talking about it because it's been forgotten. Okay, so the question is, though, we're nowhere near these numbers. Okay, the question is, the next question of the day is, if the virus is contained, and it's likely to be contained here in the United States, then why are we needing 89 million masks each month? Okay, so World Health Organization estimates that we're going to need 89 million medical masks to fight this virus, 76 million gloves, and 1.6 million goggles. And that is on each month, guys. This is not like, hey, that's what we need total. This is each month. Okay, this is each month. Considering the United States population is 300 million, I mean, we're just going to need, 3 months just to make enough for everyone here in the United States. And by the way, if you're trying to trade that, APT is one of the companies that actually manufactures some of this protective gear. Okay, so guys, with this said, I want to leave you with this one final thought. The domino effect is about to accelerate. Don't just look at the current price action, because in the 2008 crisis, there were times when markets were opening higher, but they would sell off in many instances pretty much immediately. So position yourself for success today. Okay, it's time to take action. The market is about to freaking crash. Okay, it's your choice whether you want to take the action that's going to actually help you make money and prosper within this type of environment, or whether you're going to be so zoomed in and focused on what the market is doing right this very second that you could potentially lose, and miss this 20% move that could still be developing from here downward, guys. So with that said, I do wish everybody great result trading the markets here in the near future. If you guys haven't taken some of our courses, you know, if you're not signed up for the 13 Marks Move Daily Video Analysis, guys, take action, do so. This is probably the best thing you can do right this second in order to prepare yourself to trade this markets this year, because from trading perspective, this is going to be a phenomenal year. So with that said, let's rock. Make it happen, guys. Let's trade.